October, Australian markets were a little negative for the month, sort of between 1 to 1.5% down. Started off the month relatively well, but as we got closer to the end of the month and the election from the US became a bit closer, people started to take a little bit of heed of what's going on and took a little bit of money off the table just in anticipation of the impending uncertainty. Yeah, so large cap underperformed small cap in the month. So, if we look at global markets, the mega cap tech companies started to produce some earnings updates, and those weren't as strong as what the markets were expecting. And so there's been, and it's not just this last period, there's been a bit of a rotation into a broader set of winners, if you like, in equity markets, certainly overseas, and a bit of that was happening through the month in Australia as well. So yields are interesting, and we've been talking about fixed interest yields for a while now. If we think of cash rates, so cash rates are on the way down. So that's on the back of central banks getting confidence that inflation's under control, and they've done what they need to do from a policy settings perspective. As we got into the later part of October though, the longer term interest rates, so 10-year bonds, you'll hear people reference, they started to increase, and that was on anticipation of the election result and potentially a Trump win. So markets started to react to that and started to price in a bit of a term premium, and that's maybe something you'll start to hear now as we start to head into a bit of a new regime, is people looking for more reward or more compensation for lending for longer periods of time. So that's term premium, and that's something that people are concerned about, the amount of debt in the US, the amount of spending, and the lower profile of revenue that they're potentially going to receive with the change of government, and that's leading to higher yields across the longer term interest rates. So interest rates here generally follow suit with the US and other sort of major developed markets. So a similar sort of trend, but I think the US sort of had a bit more of a pop in terms of the yield increase. Yield increase means valuation decrease with bonds as well. So that's something you think it's a better outcome, but if you're invested there already, that does start to impact what your capital values are. But equity markets are potentially offsetting some of that, which is a positive, which is why you need diversification across your portfolio. Now we're partway through November. We know the Trump election win has happened, and markets have reacted very positively in terms of risk assets. So those more sensitive sectors, those sectors that were concerned about regulation, are starting to run at a very strong race at the moment. So we've seen the likes of some of the more speculative things like Bitcoin have a very strong run, and so that's just on anticipation. I think that will get some sort of regulatory support or some sort of recognition that that's more of a regulated or potentially a bit more accessible for people and a bit more mainstream, I suppose. But otherwise, the markets have had a very strong run as a result of the election outcome. From an equities perspective, and as you mentioned, the bond yield trend continued. So the increase in yields continued on the fact that you're likely to see a change in government and what the policy implications of tariffs, of tax cuts, and of other policy implications that are likely to come into place. Anecdotes that we saw through October, there's a couple of companies specifically in the headlines with WiseTech and Mineral Resources here in Australia over governance issues. So there's, I suppose, some long-standing things that have come to the media through some investigative work from a couple of journalists, which is really, I suppose, putting a stronger governance lens over some of these companies and some of the management of the companies, and implications for boards potentially as well. So it's good that there's some checks and balances that we can see that are happening in markets. These are very successful companies, very successful individuals that have created these companies. They do get more headlines than many others, and so they're certainly in the spotlight more than what others would be. And they've probably got a higher standard to work to, and so if they're not meeting that expectation, the media will pick up on that, and that'll continue in future, and that's, I suppose, a good indication of how capital's being allocated and the decision-making processes that people who are allocating capital, so super funds, pension funds, investment managers and alike are monitoring and certainly more closely aware of what some of the governance implications are.